And we have a guest that I'm so excited for you to meet, Sophia. He's an entrepreneur with over 30 years of real estate experience.
My career started in the multifamily industry when I was going to college. So I needed money because I was a starving student and the Marriott wasn't paying all the bills. I'm like, yep, I'll work as a part-time maintenance guy. So I went from being a maintenance man to a millionaire. And I now have a book out called Maintenance Man to Millionaire. It's hard to teach to be an entrepreneur, but some people are kind of born with it, but other people learn it.
Get ready for the next iteration of you on your path to becoming wealthy. On this show, you'll get the insider's view on wealth creation, the class none of us got taught in school, with my co-host, daughter, and beginning investor, Sophia Bosch. And now, let's get started.
Welcome to the Becoming Wealthy podcast. I'm your host, Michelle Bosch, my co-host,
Sophia Bosch.
and we have a guest that I'm so excited for you to meet, Sophia. He's actually our business partner and property manager in one of our properties in Dallas. And he is the co-founder of Obsidian Capital. He's an entrepreneur with over 30 years of real estate experience. He has operated property management companies. He's also been on the ownership side, holding a portfolio of over 4,500 units, meaning 4,500 apartments. That, over his career, he has owned and operated. And so I am excited because he's also our partner in 258 units in Kentucky. And you've probably heard his name already, but I want to do a warm welcome to Mr. Glenn Gonzalez. Glenn, how are you? Good to have you
Doing
here.
great. And ladies, I'm so excited to be on your show. I feel completely honored. At the end of this show, I could become wealthy too.
Oh my gosh, you, in so many ways, you are, I think, we usually talk about wealth not just being, the financial aspect, but, do you have a marriage that is thriving? Do you have a, relationship with your children that are thriving? Are you an incredible person in your community? And you are exemplifying wealth in all of those areas, Glenn. So you definitely are there, my friend. So
Yeah.
thank you. But I wanted Sophia to get an idea of, because yes, these numbers are impressive. You've managed 6,500 units, in your property management company that you used to own and you've sold since. Own 4,500 units. That's a lot of real estate, and when it comes to millions of of dollars of assets under management, it's impressive. And I want you to talk to her about your humble beginnings. How
Okay.
did this get
Thank you for
started?
that. Yeah. It seems like it was not that long ago that I was very humbled. I keep getting humbled over and over again, it seems like.
Yeah.
But Sophia, if you don't mind, I'll just chat with you for a moment because my career started in the multifamily industry when I was going to college. So I don't know, you're probably going to go to college too at some point, correct?
Yes,
Yeah.
2 years.
Yeah. Yeah. She's basically right now a junior in high school. So she'll be a senior this fall and she'll be graduating in spring of 2026. So in fall of 2026, she's in college.
Okay.
She's
Yeah.
left the nest.
So you might appreciate this story. I love sharing my experiences in a story form. So when I was going to college, I was working at the Marriott uh, in downtown, and I was going to the University of Utah. And I was asked by my wife, who was a leasing agent, if I would come and help out doing maintenance uh, at the property that we were living at because they were way behind on the work orders. So I needed money because I was a starving student and the Marriott wasn't paying all the bills. I'm like, yep, I'll work as a part-time maintenance guy. And it was very, very difficult. But that's what got my foot in the door uh, as in the maintenance world. And to make a very long story pretty short, I went from being a maintenance man to a property manager, a regional manager, eventually owned my own property management company, and realized somewhere along the way that most of the people that made more money were the guys that owned the apartments, not the guys that managed the apartments. So it was always my dreams, like, how could I be that guy? Because my parents didn't really have money or resources to help me go invest. So I had to figure that out. Well, long story short, I think Michelle mentioned I eventually purchased thousands of units. We got up to about 6,000 units that we owned and operated. So I went from being a maintenance man to a millionaire. And I now have a book out called Maintenance Man to Millionaire. And you could read it. It's a very easy read, but it would tell you my life story. And then I wouldn't have to bore you with all the details on this podcast.
Makes sense. So I want to ask, you said that you were going, what did you go to college for? What was your major?
Yeah, I was
Did it
gonna
help in any way?
I went to school and I got a degree in behavioral science and health, and I was going to be a hospital administrator. So I took economics of health and sociology and business law and stuff of that nature, all with the intention of being a hospital administrator. I graduated college. I did an internship at a hospital and decided real quick that is not what I want to do for a living. So, what do I do with the degree where I've been studying for? By the way, it took me like 6 years to get a 4-year degree. Don't ask me how that happened, but it did.
Well, if you're working full time and working also on the side, maybe that's how that happens.
It's hard.
Yeah.
I have one other funny story though that I have to tell you. That's not related to real estate, but it is related to being an entrepreneur. When I worked at the Marriott, they were going to upgrade all their televisions in the hotel rooms. So they offered to all the employees, does anybody want to buy a TV? We'll make them available to the employees of the Marriott. And I'm like, how much are they? And they're like, $40. I'm like, $40 for a color TV? They're like, yep. I said, I'll take 100. They're like, what? I'm like, yeah. Because I realized that's back when they had Craigslist, right? I'd put it on for sale on Craigslist and I would sell them for $80. So I bought 100 of them at $40 and sold 100 of them at $80. So I doubled my money. So, somewhere along the way, it's hard to teach to be an entrepreneur, but some people are kind of born with it, but other people learn it. So there's a lot of ways, to become an entrepreneur. So
To get
anyway.
and I have been asked in podcasts whether, are you born one, or can you or can it be nurture? And I believe that it could be both. Sometimes time and circumstances are right that even though that has not been who you have been, the circumstances force you, or your desire to accomplish something bigger than what you've been doing forces you to think outside the box. And I'm a firm believer that there's there's entrepreneurs out there that are the result of what I like to call the freaks of nurture versus the freaks of nature.
Yeah. Yeah. So Sophia might have a little opportunity to have a little bit of both, to be honest with you. Would you consider yourself an entrepreneur, Sophia?
Yes, I'd say so. Yeah, but I feel like I do encapsulate maybe a little bit of both, just in the fact that maybe I have had, because of my parents, like maybe a step or a leg up in some ways.
Yeah.
But out like at the end of the day, it's what I also want. So yeah, it's kind of both.
Yeah,
Yeah.
absolutely. And
Well,
she sits wherever we've sat like at a waiting room at a doctor. And Sophia will come up over, to Jack and me, and she'll be like, "Wow, look at it. It's like packed." And I wonder if each and every one of these patients, because we go to Clínica La Familia. It was a Saturday, and there mainly is cash, cash clients that are paying, patients that are paying cash outside of the insurance system. And she's like, I wonder how much money, they're making. So right now, if in an hour they're seeing these amount of patients, in 8 hours they're seeing these, that means X per day per week times 4 weeks, like wow, times 52 weeks a year. Wow. The doctors are raking it in. So if we go to a restaurant, we're looking at that as well. Like her mind is always constantly thinking, wow, what's the opportunity here,
Yeah.
So yeah, I think there's a little bit of that, but of course, having
Oz might have come also from you guys just not. I feel like we have a very open family. Like you will talk, for example, our group chat. like the three of us, you guys text each other about expenses, revenue, all of everything. You guys text each other in the same group chat that I'm in.
Well, sometimes it's not intentional, but it goes in there, and we're like, oh,
Always in the loop.
Jack's like, anyway, she needs to know, what's going on and what's happening.
Or like conversations in the house. Like most of the time when I'm home, I'm usually in my room, but then I'll get a knock on my door and everyone, including the dog, ends up like laying in my, and we just get into conversations about everything. So it's like, yeah.
I mean, your friends may ask you, what's an NOI? And you'd be like, well, I know what that is. That's a net operating income, because you're around the lingo and other people wouldn't even know what that means.
Yeah, absolutely.
You're very fortunate to have the opportunity to be around people that talk successful and look to be successful and want to create wealth, not just monetary wealth, but parents that love a kid enough to want to teach them things that aren't taught in school or college.
Yeah, absolutely. Yeah, absolutely. Now, talking about net operating income, when you're trying to find deals and properties, just in general. So Sophia, has already made it clear to us, guys, I've loved making money with my land deals, and I'll probably continue doing a few here and there, but that's not going to be something that I will focus on. What I would like to help you guys is on the multifamily side.
Yeah.
And, she even some of the properties that we own here in town, she'll walk them with Jack, or if there's an issue that they've seen people loitering at night, she, along with Jack, will go there in the evening to see what's going on, and or walk with investors and so on and so forth. So, but let's start at the beginning.
Yeah.
If she didn't have a property that is already part of a portfolio, but she's looking to find deals, especially in this market, what are some, and it's usually value add deals is what we're looking at, pretty much also similar to what
I
you
get to
do,
the
Glenn.
same ones. So
Yes, to try to force the appreciation of the asset. So when you're looking at properties in general, from an underwriting standpoint, what are you looking at? What constitutes a good deal versus a bad deal? And perhaps you have,
Yeah, what I was thinking, like when I would think of the first thing I would think of, if you're talking about the U.S., what state is it in?
yeah, so maybe market and property specific.
yeah. So what I do is, you'll get lots of various opinions, but for our company, for Obsidian Capital, and what we look at, we put the assets in two different categories. It's either a cash flow property, specific cash flow, or it's a value add. And rarely, do they have. Sometimes they have both, but really they fall into one of those categories. So I will tell you that when we analyze a deal, and we'll talk about a value add deal. We're buying one right now, and I will give you the particulars of that particular deal. There's 70 down units, so there's out of 240, so there's a lot of down units. There's no cash flow on the property, and the reason that they're down is because the roofs are leaking and they've got plumbing issues and things of that nature. So one of the mistakes that most people make is they don't get enough capital to fix all the problems. They'll fix 90% of the problems or 80% of the problems because they can't really get enough capital to fix everything. So that's a big mistake. But if you could fix 100% of the problems and have a little left over for what we call a rainy day fund or emergency fund, then all of a sudden we're going to, on that property, for example, we're going to move it from where occupancy it is all the way up to a 95% occupancy and then sell it. But we're going to make we'll probably double our money in 3 years. So that's a value add deal, right? So I guess my suggestion and recommendation is when you look at a value add, you have to have the right capital. You have to have enough experience to fix everything that's broken. A lot of people fail in that category because they overlook or are overly optimistic. I know the roofs look good. They're 15 years old, but they're not leaking yet. So they don't raise any money for roofs. Well, 3 years later, they're all leaky. Right? That's a common mistake.
Yeah.
And it
Not
could be the same thing with
basically
plumbing
not
or air conditioning.
not budgeting for enough capex, basically repairs such as the roof, just because in the moment it doesn't, it doesn't require any repairs. And then, we've had situations like the one in Louisiana that you heard us talk about of this property. That was good. That got hit by a hurricane. And this has been way beyond value add. This has been a complete repositioning. And boy, do we now understand when Glenn says right now, you make sure that you know how to fix 100% of the issues, because it's been a learning curve there in
Yeah.
learning how to fix everything,
Yeah.
beyond.
And another common mistake is in this industry, in this market, insurance is quite expensive. So the insurance companies have gotten wise and they've just raised the deductible. And the deductible is usually 2% of the value of the building. So, for example, we're buying this one deal for $17 million. So if, it could be a 2 or a 3% deductible,
Mm.
you're looking like a $340,000 deductible before the insurance kicks in. Well, you better have $340,000 sitting in a checking account in case it catches on fire as a rainy day fund type thing.
Yeah. And what he means by deductible, Sophia, is that when you buy insurance, so you are expected, to pay a monthly premium, but also there is a portion of whatever expense, the insurance is covering. There's an initial portion that is called a deductible that is basically out of pocket, from your pocket before they start paying for any benefits. And so this is 2% is $350,000 in this case, that they're expecting for it to come out of your pocket before they start kicking in with any other benefits.
Yeah.
So yeah, that's crazy. And if you don't account for that, then yeah, absolutely. I can see how people get burned. Now,
Yeah.
I'm going to make a pause here, and I don't know if you want to make a note of it, but half of your face right now is in the light and half of it is in. There we
The
go.
sun is coming down.
Yeah.
So
They can edit it out. So we're good.
Can't.
We're good. Yeah.
maybe I'm going to try and move my computer. Now it's dark, huh?
Uh-huh. Oh, well, right there. Right there.
Is that okay?
Yeah. Let's do it. That's good.
Better in?
Okay.
That better?
Perfect. Yes, way better. Yeah. At least we're not having you half like exactly in the line,
Yeah.
Okay, perfect. No problem. I want you to look the best. Anyway.
That makes two of us. So that other category that I was talking about, Michelle, is the cash flow deals,
Yeah.
right? So you got your value add. The cash flow deals, if you're going to buy it, a lot of it has to do with analyzing the market and really understanding the financing. And that's the hardest part. Our last acquisition was a 232 unit deal up in Temple, Texas. We assumed an existing loan with Freddie Mac that had a 3.6% interest rate fixed for the next 8 years. So because the interest rate is so low,
No, that's a good, right now interest rates what are they hovering at right now, Glenn?
5.75%
Yeah.
to 6%, somewhere in there, for
So
a
they're
Fannie
getting,
Freddie.
this is a good deal, basically way cheaper debt than what you can go out there and get right now a loan for.
And because we make such a low mortgage payment, it spits off more cash. So we were fortunate to be able to acquire that. And without going into too much detail, you really got to understand the cap rates and the values as well. But that could be another whole podcast.
I understand that. They've explained that to me.
You understand cap rates. Well, you're off to the races there, boss. That's awesome. Yeah.
Absolutely. Yeah.
So, a lot of people become overly optimistic with cap rates. They're like, well, we're going to buy it at, call it a 6 cap, right?
Yeah.
And then they say, but in 3 years, we're going to sell it for a 4 cap, which just really skyrockets the value.
Yeah.
But who's to say that the cap rates are going to go down in 3 years? We don't know. So you have to be somewhat pessimistic, optimistic, I don't know, somewhere in between, in order. But a lot of people that are in trouble today were overly optimistic that the cap rates would stay low and they would make a lot of money. But just like the interest rates went up, the cap rates went up. which in turn dropped the value.
Yeah.
So now people
Right.
can't even sell the properties for what they paid for. And you see that going on quite frequently now.
Yeah.
They also can't pay their or like
Yeah, they can't pay their loans. Absolutely.
Can't make the mortgage payment.
Yeah. As the interest went up, yeah. If it wasn't a fixed rate but a variable rate, they're having to, yeah, yeah, absolutely. You're having to adjust that, and all of a sudden, it does. It really does. But
someone have a variable rate.
there's really smart people that both Glenn and we know that have been in this predicament and in this situation that you would never think that,
Yeah.
how could those assumptions have been made? And I think it's just,
Well, then would you go well, this is just a question. Is a variable rate or like interest rate
yeah,
better or a fixed?
fix and
Ideally fixed.
and for the most part it is. The thing is, Sophia, that sometimes you cannot qualify for institutional money, and before you qualify, for example, for a Freddie Mac or a Fannie Mae loan, you have what is called bridge financing in the middle. And while you're trying to bring this property up, and then all of a sudden you bring the property up, but interest rates have gone up, and now when you're trying to refi, you're having to refi at a bigger dollar amount, and you cannot make the payment. And that's basically what happened.
What a great question she asked, right?
Yeah.
Which is better, to have a fixed interest rate or a variable interest rate? And to be honest with you, there's really not a right answer to that, because it depends.
Yeah.
Like when the interest rates were really low, people decided, hey, interest rates are low, I'm just going to get a variable interest rate, because the lenders wouldn't lock in at 4% or 3%. Some would, but so they took the risk. But guess what? It went up. But let's say the interest rates are up right now, call it 7%. Do you think you're going to go to 9, or do you think they'll go down? There's talks of it going down in the next little while. So really the risk has shifted.
Yeah.
So, but there's a word we use, mitigate. You can mitigate the risk and still get a variable interest rate, and you pay a fee, and they put a cap on how far up it will go. That will also reduce your risk. Now, why do people do variable interest rates or bridge loans? Because they get more proceeds. Like this property that we're going to fix, or it's going to take about $3.5 million. Well, if they went off the current value, we wouldn't get much of a loan, but the
Yeah.
bank's willing to give us a variable interest rate, short term, it's called a bridge loan, 5 years, and we're going to pay to fix the interest rate so we can mitigate our risk. But
So there's a cap, there's a ceiling basically on the interest rate. They cannot charge them more than that. That's basically, and that costs a little bit, and you're willing to pay a little bit to have that ceiling so that it protects you basically from the interest rate going higher than that amount.
Okay, I did not know that exists.
yeah, so you asked a really complicated question, and it's a good question. Which is better? And it depends on the risk and the opportunities and the value. So on the cash flow properties, if I'm going to hold them for 10 years, I do not want that interest rate to change much. I want it to be fixed. But if I'm going to get out of this property in 3 years, I'm going to fix all the broken things. To some degree, the interest rate isn't going to hurt me as bad as, having enough capital to fix all the problems. So every deal's a little different. So
Yeah. What about, Glenn, from a market standpoint? Like, what markets are you still, feeling very bullish about?
yeah,
And just in general, if there's a person that is just starting to get into multifamily, what would be your recommendation?
you know, I only know what I know, right?
Yeah.
So we buy and are active in all of Texas. We have stuff in Dallas, Austin, and San Antonio, and those submarkets, Fort Worth. But we also have stuff in Kentucky with you guys. We have a couple of deals there, and we also have 2 deals in Birmingham, Alabama, soon to be a third. So we look at where the opportunities are, and that's my advice to anybody. There's opportunities everywhere. You just got to become very proficient. I wouldn't think about buying a deal anywhere in Arizona, Phoenix, or anywhere around without going to you guys first and saying, what do you know about this area? A lot of people, they jump into real estate thinking it's a great deal, not knowing the area. So there's lots of resources, but you have to spend the time to become very analytical on an area.
Yeah. What are some so besides the relationships, what are some other tools or resources that people can, use, for example, Sophia, in order to evaluate a market? Like,
Yeah, and then adding on to that, what are certain markets that you personally would stay out?
Stay out of. Right now I live in Austin area, but I wouldn't buy any apartments in Austin area, unless they were being foreclosed on or somebody was about to lose them. I would take a look at it. But in this area, they built so many brand new apartments. They're all over the place and they're not even full. And they have more new ones coming online. So in that, aspect, Austin and the area.
but that means there's an
Yeah.
incredible amount of supply, Sophia,
That is very
and not enough demand, which means that the rent rates are not as healthy as he would like them to be. The prices, yeah.
Yeah.
Mm.
So, yeah, we have a negative absorption, which is the terminology we use, and rents are going down by double digits. And they used to go up by double digits. We were seeing 11, 12, 13% rent growth year over year over year here in Texas in the Austin area. But Elon Musk moved here. He brought Tesla with him. Apple is going gangbusters here in the Austin area. There's all kinds of businesses coming here. Samsung is moving their headquarters out to Taylor, Texas, and everybody's coming here. So all the developers are like, hey, we should build some apartments. And they did. And they're continuing to do it. So that goes back to my original statement, which was just become familiar with the area. We're currently buying and actively buying, but we're buying in Alabama or Kentucky or, pockets of DFW are
Yeah,
still.
which are markets that, you don't hear a whole lot. Like, for example, you hear about, just in general, Florida, Arizona, Texas being states in which there's an incredible influx of people coming from northern states, and just population growth that is happening constantly. But for example, I haven't necessarily heard that about Alabama or even Kentucky, where we co-own a property. But that doesn't mean that there's not good deals there. You just gotta you gotta find them. You gotta find them. On finding them, how do you find your deals right now? Relationships, brokers?
That's a great question. I've been in the business 30 years, so I have a little bit of advantage. Most of my deals right now are coming through relationships.
Yeah.
So I do get them actively listed, but really friends will call and say, hey, I found a deal. Do you want to take a look at it? Brokers know that I have the ability to close a deal. So, for example, I've had brokers call like, hey, Glenn, the owner does not want us to take this to market, but would you and Obsidian and Mike want to take a look at it? And we're like, send it our way. Those relationships come over time. So if I had some advice on young people trying to buy apartments or into multifamily, my suggestion would be partner up with somebody that's got a great reputation of access to deals first. Develop the relationships, get the experience, don't make mistakes, and try and do it on your own because you may overpay.
Yeah.
So
And these are not mistakes, that are a couple thousands. They're millions of mistakes, as you know. Because we've paid some a little bit of tuition, in the school of life when it comes to that. But it happens to everyone. It happens to all of us. But if you can have someone that can give you a leg up, especially if you're starting, and help you prevent and navigate some of the landmines, that's ideal.
yeah, and it's all relationships. You think about this conversation that we're having today. I was honored to be on your podcast, but it came because a friend of mine, Jack, invested in a deal, and Michelle came in on a deal in Kentucky however many years ago. And it was a tough deal. There was vacant apartments. They had no financials. And it was in a small place called Hopkinsville, Kentucky that nobody's heard about. But we bought it, stabilized it, refinanced it like a year and a half to 2 years later, returned a majority of the equity back to the investors.
Most
They
of
got
the capital that we
most
had
of the money
invested,
back,
we got back. Yeah.
83% back. But our distribution started going up. after we gave their money back. So their return on their whatever you're left in that deal, which is not much, from millions of dollars invested to only hundreds of thousands invested. And all of a sudden, and we locked in at a 10-year interest only at 3.5% interest with Fannie Mae. Like that's what we would call in the industry a grand slam.
Yes, that has been one of the best investments ever.
Yeah, and it came because of our relationship that we had, right?
Yeah.
And it started with Jack asking a simple question. He said, "I made a lot of money and I need some negative K1s." So he needed
Depreciation.
shows
Remember how we talk about depreciation with Uncle Warren? Yes. To offset our income? Yeah.
So he needed something that on paper would help him save on taxes from over here because he made money over here. So we provided him an opportunity to show that he lost money over there. And it worked out pretty well for him. Um, and that just came through a conversation that we had met at a conference, networking. And
Yeah,
there we are.
basically we were part of a mastermind group, and with I think with Rod, right? I think this is maybe where we met. So
yeah.
And I think Papa had met with Glenn once in Florida. Then I met Glenn actually in Denver at the event in Denver. And that's how the relationship pretty much started. We were very impressed just with his breadth of knowledge, but not only that he was knowledgeable, but that he also had values that were very similarly aligned with ours. And that is something very important when building relationships with someone. And I think that's where Jack felt like, okay, this is someone that I can pick up the phone and know that if I want to park some of my hard-earned money somewhere, that will basically allow me to grow in that partnership, but also offer paper losses, which is what negative K1s are. Paper losses through the form of accelerated depreciation. Yeah.
Uncle Warren.
Yes. So actually, our CPA, his wife, now is Sophia's godmother. So they become more than just our CPA and his wife, but actually family. So now Warren is Uncle Fam.
Yeah, tell him Uncle Warren.
Relationships. That's exactly right. Relationships.
Yeah.
So wonderful. So any other questions that you have regarding that? Anything that he mentioned? Something that prompted to ask any additional things, clarification? That's pretty much the gist of it, Sophia. When you start out, it's going to be leveraging relationships with someone that is already in the market in whatever it is that you're doing, because success leaves clues. And if you can just model what that person is doing and leverage the relationships that they've already spent years creating, that I think it's the best route for someone that is young to start learning and basically contributing with what we would call sweat equity. You doing a lot of the work in exchange for wisdom from years of experience and context and relationships and so on and so forth. Yeah.
In that book that I wrote, Maintenance Man and Millionaire, the first chapter talks about the value of you.
Yeah.
Because really, you've got to invest in yourself somewhere along the way. There's a lot to learn in any industry. And one of the things that I talked to my son about, who graduated college a little while ago, he's a graphic designer. He got to be really good friends with all the other graphic designers that were graduating at the same time he was. And sorry, my phone. You turn off your phone. I told my son that when he graduates college, I asked him, I said, "Are you going to be a better graphic designer than your buddies?" He's like, "I don't know. Why do you ask?" I said, "Well, all 10 of you are going to go interview at 2 companies, and they're going to hire 2 of you out of the 10. So I hope you're better, like you're in the top 2% of your friends, because at the end of the day, you're all going to go interview for the same jobs." And so it kind of hit him. He's like, "Well, my friends wouldn't do that to me." I'm like, "Yeah, it's competitive out there, son. And, college is fun, but when you walk away, you better walk away smarter than your other co-students, because they may take your job from you. So invest in you.
Yes.
Smart. be better than the competition.
But
You know what I mean?
currently, I go to a very small private school here in Phoenix, but everyone there, there's a good, I'd say my class is 80 people. I'd say at least 40 of them
Mhm.
are wanting to go to the top schools. And typically from a small private school in Arizona, the maximum like a Harvard would take from us, from my school, max 2 people.
2 people. So that proves my point, right?
Yeah.
So, yeah. So, chapter 1, the value of you. You can never stop learning. It may seem hard, but it will pay huge dividends later in life. And it doesn't matter what industry you're in. The principle applies. Be good at what you do.
Yeah. And Sophia, one thing that Glenn, that we always tell her is that she's going to be going to college, and yes, we want her to be in the, in that top 1% or 2%. But that I also want her to see college as an investment also in relationships, that no longer you go to college and see your professor as just your professor, but he is or she is all of a sudden a person that is now become part of your network. A lot of those professors actually work with private enterprise outside of the university or have come from the private sector and now are on this side, in academia. But that also that these relationships are also super super important to foster, while and to cultivate while in college, because I think for us, there's probably more that Sophia can learn that will be directly applicable to what she's going to be working with us in the future if she just stayed here. But part of our desire and also hers to go out there is to have, of course, that investment in herself, in really figuring out how to become independent, an independent thinker, but more than anything, also create relationships with, with not just peers, but people that are uh, the types of schools that she's looking at that Jack and I didn't have
Yeah.
in our horizon. You know what I mean?
The school of hard knocks. That's what we graduated.
Exactly. So, so that's again going back to relationships with what he said, super important there as well. And yeah, don't forget that once you're out, it's competitive as heck. Absolutely, that is that you don't have the right solution at the right time, and that means you cannot pay payroll as an entrepreneur, and you more than likely need to close doors. So it's important to invest in yourself so that you can be always at the cutting edge. So with that, any other words of wisdom, Glenn, for her as she starts, or for any person that is listening to us?
Sure. You know, I'm gonna share. I love stories. I told you that, right? So, my I think I've shared this with Jack at one point. So Michelle, forgive me if you've heard it, but my wife about 9 years ago had to get a double lung transplant, and that changed the course of our life. But I remember before she got her transplant, we all have pet peeves, right? And it used to bother me that my wife would drink out of a water bottle, and then she would leave half water bottles drunk all over the house, one in every room, you know. Sophia's like, oh, I'd probably do that. Anyway, so I used to make fun of my wife. Why do you leave water bottles all over? Why don't you just finish what you started? And she's like, why do you care? I'm like, I don't know, but it was this little thing of contention. But after she got sick and then had to get this transplant, and when she came close to dying, it dawned on me that if she had passed away, I wouldn't have that issue of water bottles laying all over the house anymore. And I would actually miss her. And now that the water bottles are there still, and she's still the same wife, now I'm grateful for the water bottles.
Uh-huh.
Why? Because that means she's still there. And you think about arguing over little things really don't matter in life. What really matters in life is the gratitude and showing appreciation for the people around you, and every day, So we don't fight anymore because really in life, there's really nothing important enough to fight about.
Yeah.
There just really isn't. So I guess if I had to leave any words of advice at the end of this, go make a lot of money in real estate if you can. but develop relationships along the way and be grateful for the people around you. And don't sweat the small stuff. They're really not important.
Oh my God, I don't think I could have made that land in a better way than with such a personal and deeply personal example. It's with a matter of like life and death situation that puts things really in perspective. And I can relate at a much lesser level with because I have been fighting a few years back with Lyme um and yeah, the things that I would be upset about, and now I'm like, oh, I woke up today. My goodness, nothing hurts. My mind is freaking sharp. Nothing that can happen today really is going to be a problem.
Nothing, nothing, right? So that's beautiful.
Yeah, so I totally can relate there. If anyone wanted to connect with you, Glenn, with anything regarding, properties, opportunities to invest with you, where can people connect with you?
If they're your friends, they're my friends. So Obsidian Capital, and my email is Glenn with 2 N's
Uh-huh.
at obsidiancapitalco.com. And is it okay to put my phone number out here too?
Absolutely.
Area code 512
Uh-huh.
937 5964.
And
Personal
that
cell
is,
phone.
I mean, that's people that might want to invest with you or that might have a deal. Who knows?
Yeah. Or if
Yeah.
they just have a question. I've had mentors in my life that have helped me to get from A to B, and I would mentor anybody if I could. So,
Yeah. Thank you so much, Glenn. You are so generous with your time, with your wisdom. Um, if something was to happen to Jack and I'd be, I'd be so happy that, this partnership would continue with the next generation.
yes, I agree. All right, mom and dad are out. Sophia, you're in.
Yes, and she's like, I don't know if I'm ready yet.
Hey, thank you both so much for allowing me to be part of this. It was a ton of fun, and
Thank you.
and
Thank
I
you so much. And we're
so thank you.
we're getting, I mean, we get about 600 downloads, I think, an episode. So it's not nothing. And it's usually, a very, I would say, loyal, following of ladies, primarily. But yeah, and their daughters, some of them, with their daughters or sons. And it's this has been an amazing hard project now that we've been working on for the last year, and it's given me the opportunity again to, continue to build the relationship with Sophia and also get wisdom, keepers come and pour and edify and build her and 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 introduce her to the all the amazing people that we've met along the way as well. Um, that's not easy, you have to sort, from hundreds of people that you meet to a few amazing gems. And thank you for being here.
Yeah, my pleasure. Thank you for having me.
Thank you. And that's a wrap. So thank you guys for being with us on another episode of Becoming Wealthy. Looking forward to joining you on a future episode. And if you love today's episode, definitely share it with someone and leave a 5-star review. Leave us a 5-star review. Absolutely. Thank you so much. And until the next one.